One of the questions I have most weeks is, Luke, how can I retire from investing in property? How many properties do I need? Do I need 4? Do I need 5? Do I need 10 at $100,000? Or how does that work out? So in today's video, I'm going to give you a very simple retirement calculator that you can calculate on your phone and work out this number for yourself. And I'm also going to talk you through our strategy, the number of properties we have, what our end goal is, and how you can create a passive income that will allow you to retire early. And I don't really mean retire early. I mean, do things that you love and spend time with the people that you love. So without wasting any more time, let's pull up the retirement calculator on screen. So this is very basic, but I'll talk you through the understanding and how you can actually put in your own numbers to calculate this for yourself. Now, this looks at assets, liabilities, and equity and target income. Now, one of the simplest ways you can actually find out how your property portfolio is performing is do your tax return. When you do a tax return, you need to look at the income your property has generated. You need to look at all of the expenses, the rates, the water, the management fees, any repairs and maintenance, any depreciation you can claim on that property. And you can do some analysis as to whether that property is bringing you in passive income each year or whether it's taking money out of your pocket. But bringing this back to the calculator on screen, we're looking at the assets and essentially the equity you're creating in the portfolio at the end of the day. These numbers on screen could show $2 million of assets with zero debt or $10 million of assets with $8 million worth of debt and lead to the same result, which is what is your equity in your current portfolio. For us, these are examples of similar numbers to what we've got in our portfolio. We've got roughly $5 million of assets, and ballpark, we could have around $2 million worth of equity, and we're looking to generate a target income of around $100,000. One of the most common targets that people have is that $100,000 of passive income each year. Now, if you were achieving a net return, so after expenses, on that equity base or on that asset base, you would be achieving $100,000 worth of passive income. Now, that is net returns. That's after those expenses, rates, water, interest bills, all those types of things. So if your net return's more like 3%, then you can punch that number in, and on a $2 million asset base or equity base, you would have $60,000 of passive income each year. Now that we know around $2 million worth of equity at a 5% net return will give you that $100,000 passive income, Luke, how am I actually going to get there? Now, for me, our journey has been more capital growth focused because I want to build that net worth. I want to build that equity base first and then transition it to cash flow over time. There's lots of gurus, YouTubers, property commentators out there who have very different strategies. One that comes to mind is Chris Gray. He's very infamous. I loved watching his content from years gone by, and he went very blue chip with his asset base. He looked at Bondi, inner Sydney, and went for those very expensive assets that didn't necessarily have the yields coming off those properties. But he was able to build his equity and build his asset base and continue growing as the Sydney market lifted. On the complete flip side, you've got someone like Nathan Birch from Be Invested. He's got hundreds of properties and they're more lower income, lower purchase price, buying near rebuild cost, and he's being able to amass a large portfolio of assets by having high generating yields. I consider myself somewhere in between Chris Gray and Nathan Birch in that we've gone for growth first. So we've bought blue chip assets in the Brisbane market, we've manufactured value on those deals, and now we're transitioning to more of those cash flow properties, whether it's the unit block purchase in Coffs Harbour or our next buy and hold purchase is going to be a house with a granny flat on the back at a lower price point and with a higher yield. So you need to work out what suits you, but generally for the everyday Aussie, around about that 3 to 5 properties will allow you to amass an asset base of around 2 to 3 million. Then you can work out whether you want to keep growing the asset base towards 5 million and increase the debt as well, and work towards the target of $2 million worth of equity. This is why I think the numbers debate or number of properties debate is irrelevant. It doesn't matter whether you've got 10 properties at 200K or one property at 2 million. Of course, they're going to be in different geographical locations. Of course, there's different risk profiles associated with those properties. But if they're giving you a similar return and they're of a similar risk profile, then to me, you've got to weigh up whether you want to manage the 10 properties or whether you can afford to get into one $2 million property. So you need to work out what suits you. Now, for Emily and I can speak from experience in what we've done in our portfolio. We've been able to buy assets somewhere between $500,000 and $1.5 million. And we've been able to progress by pulling out equity out of our property portfolio after we've renovated and add value to those deals, and use that equity to go and make a subsequent purchase. Now for us, the question is, do we keep growing our asset base and try and increase the equity? Or do we start paying down the debt to reduce the liabilities on our balance sheet and try and increase the equity and increase the available cash flow spinning off our property portfolio? Essentially, in quick numbers, if you're able to buy 5 properties at $500K a piece, you'd have $2.5 million worth of assets. You then need to work out whether you sell 1 or 2 of those assets and pay down the debt, or whether you look to continue to grow your asset base and manufacture value on those deals to create a larger equity value in your portfolio. I know this is bringing property investing back to basics, but everyone's at a different stage in their journey, so it's important to reflect on what you really need in a property portfolio. We don't all need $100 million. That's actually quite a lot of responsibility as I see it. I think what most Aussies are looking for is a passive income that allows you choices. I want the choice to spend time with Asa and my wife Emily, hanging out and having some long weekends here and there and going on holidays. But I'm also passionate about business and helping others create choices, and also enjoy looking at renovations and flips. So you've got to work out what you're passionate about and how your property portfolio can get you there in terms of allowing you to create your job as your passion, and controlling your time at the end of the day. With the inflation we've seen in Australia's economy and what's going on with prices for food, rates, water, electricity, gas, all those types of things, do you think $100,000 is going to be the benchmark? It feels like $100,000 a year passive income has been the widespread benchmark for a long period of time. Is that going to need to increase to 200 or 300K? For Ellie and I, bringing it back to our portfolio, we're looking to grow our property portfolio towards the $10 million mark over the next 10 to 15 years. This is not a short journey for us, but at this point in time with our $5 million plus portfolio, we're looking to create choices by manufacturing value. We're going through cosmetic renovations on each of those deals slowly over time. We're also looking to hold as much cash as possible in our offset accounts to give us choices and to give us liquidity and also that safety net. David Ramsey talks a lot about having your safety buffers in place, and as you grow a larger portfolio around the $2, $3, $5 million mark, you also need to have more cash on hand to buffer yourself from risks. Have that emergency fund in place as well. It's all a bit of a juggling and balancing act as you go, but that's the nature of tweaking your property portfolio over time and working towards that end goal of financial freedom and choices. If you'd like to have a chat with myself and sit down and have a free strategy session, if you're looking to purchase a property in the Brisbane market in the next 6 months, then head over to purposeproperty.com.au to book in a free strategy session there. Otherwise, if you could drop a like on the video, subscribe to the channel down below, leave a comment, let me know what your passive income target is, and click this video over here for more things real estate, renovating, and financial freedom. I'll see you in the next one. Peace.